Most first-time home buyers are completely baffled by the whole process, and that starts with getting the mortgage. From the time you first submit the application until closing day, there are a couple dozen things going on. Any one of them could be an issue. What we don't want to see is you lose out just days before moving into your new home. Let's take a closer look at 13 issues you definitely don't want to do before closing day. My name is Mike Lavoie. My passion is to help you make sense of real estate. If you need help finding a top real estate agent near you, or you simply have a question, my contact information is listed below. If you're new here, please join us by pressing the subscribe button. And if you like the video, press the like button as well. Okay, let's take a closer look at this thing. I'm sure everything on your mind this weekend was about, I'm gonna go out, take out a mortgage, go through the pre-approval process, go through the process of finding a new home, but I really want to mess it up 3 days before closing. I can't imagine you'd plan that, but it can be done fairly easily. So let's set you up for success the first time around and go over the 13 things you definitely don't want to do when you're going to buy a home. Number 1, do not miss any payments. You want to stay current on all your credit card, car loans, student loans, and any other debt you have currently. Missing even one could seriously jeopardize your loan application. And I know the lender's already pulled a hard credit check, gave you an approval, you're all set to go. Trust me, 3 to 5 days before closing, the lender is going to get what is called a soft pull on your credit report. It is their way to verify that nothing has changed since the original hard pull and everything is on the up and up. A missed payment showing up is going to cause an issue and could stop the whole process. Debt consolidation is a topic that should have been brought up 6 months before submitting an application for a mortgage. Getting your debts into one loan and one payment might be a great idea for some, but not so much for others. Either way, you need to get into that conversation with a financial planner and a loan officer long before the application stage. If you're in the loan process now, the result of doing it could be no mortgage and no new home. Think about it before you do it. The next one is job hopping. Changing jobs, even for more pay, could be a deal killer for the mortgage. Lenders want to see consistent, long-term, like 2 years, of steady income and career positions. Job hopping is not going to look good. Consider you're going from a salary position to an hourly position. That alone will create an issue with a lender. Talk to your lender before changing jobs. You may decide to postpone that change. Loan underwriters can be a very nervous group when any major change to employment, and it usually is a deal killer. Make sure you have the keys to your new home in hand before taking that new position. Okay, number 4 is no money maneuvers. You might be thinking, no money maneuvers, what does that mean? That means moving money from one account to another account for no apparent reason. Let's say you have $50,000 in savings account, earning nothing. You go to the bank one day and the teller talks you into moving $30,000 into an interest-bearing account. Wow, that would be better. Sure it would, the day after closing. Moving money from one account to another account, especially one that is not yours, is a big issue. The lender is going to want a paper trail on where that money went and why it went there. Just avoid the whole issue. Do not move money around until after you have the keys in your hand. Trust me, it can wait. Number 5 is don't break up with your bank. Breakups are especially hard when you're applying for a mortgage. Do not leave the bank you've had a relationship with the past 5 or 6 years or that was on the original application. Banks are always looking for assets. You get a ton of mail offering free banking for years. 0 interest if you transfer now. Most of the time, they're a great thing. Not when you're closing on a home. This qualifies as a financial maneuver and is going to raise a red flag with the underwriter. Wait until you have closed on that new home, then go to the better bank. Don't break up with your bank yet. Number 6 comes up more than you would think. You're getting a new home. You need a new car for the driveway. Your credit rate is great right now, so why not buy it now? You run down to the showroom, fall in love with that bright red shiny coupe, and sign at the dotted line. Let me be perfectly clear. You had better love that car because you're probably going to be sleeping in it. That increased debt is going to show up on your credit report. And that credit report is going to get pulled just before closing. Unless you paid cash, that debt could possibly put you outside the debt to equity ratio or probably income to debt ratio. Either way, there is no loan. And by the way, no, don't pay for cash. That goes back to financial maneuvering and my next issue, spending down your payment and closing cost savings. Okay, number 7, do not blow your money saved for closing. Closing costs are going to be between 2 and 4% of the purchase price of the home. You can figure 3% as a good number. That means on a $300,000 house, your closing costs are going to be about $9,000. By this time, the lender should have given you the amount you will need for your down payment. That might be 3%, 5%, 10%, whatever was right and comfortable for you at the time you did the application. That number is in addition to the closing cost. You've probably been saving for the closing, have the money in the bank, and are ready. I have seen where buyers would decide the week before to purchase something using that money. They didn't close on their home. Do not use that money for anything else. You're 6 days away from closing on this brand new home. You're all excited, ready for the next stage in life, but you look around and you say, crap, we don't have any furniture that works with a new home. So you run down to the furniture store, find some great deals, fill out that credit app because we told you not to spend your closing money. The furniture, it's set to be delivered on closing day. You go home feeling pretty darn good. That credit app is going to show up on the final credit pull as a new line of credit. It is going to affect your FICO rate. It is going to stop the closing. Do not buy any large ticket item before the closing, credit or cash. Credit applications will affect the credit report. Large amounts of money going out will have to be explained. New furniture, appliances, that new zero turning riding lawnmower, all need to wait till after the closing. And you have the keys in your hand. Remember, the idea here is to avoid issues and get you into that home. Number 9, do not make large, unusual deposits into your brokerage account, bank account, or any other account. So you're going to ask, Mike, isn't having more money in the account better? Not necessarily. This may seem a little weird, but looking at it from the underwriter's point of view, unusual large deposits, especially cash, causes them big concerns. Why is that money hitting your account now? And where did it come from? The lender is going to have to source that money. They're going to find out if it was a gift. If it's not, does that money have to be repaid? Are there taxes due on that money? Cash is a huge issue. Your $10,000 deposit of mattress money is going to raise a flag like you can't believe. Where'd that money come from? Why now? Is it legal? For all the lender knows, you're a drug king. Okay, not really. But they have a term called seasoned money. That deposited money needs to be in your account for 60 days to be considered seasoned. If you have a large amount of money in your mattress, leave it there until you have your keys in your hand. Large, unusual deposits go back to the financial maneuvering issue. If you do it, be prepared to give a lot of detail. Number 10, do not stretch the loan application answers. We all know the story of Pinocchio. He may have stretched the truth a little. No one is saying you lied in the application. Just don't stretch the truth either. If you have questions on the application, either at the time you completed it or later, talk to the loan officer. Unlike the boom time years ago, everything you put on that application nowadays is going to be verified and sourced. Things like guessing on dates of employment, guessing your annual earned income, it's going to cause you paperwork and could derail the application. When in doubt, pick up the phone and call your loan officer. Remember, the plan is to get you into the home of your dreams as smoothly as possible. We don't want something, simple like a missed date to come between you and your home. Number 11, no hard inquiries on your credit report. Obviously, there are going to be hard credit checks from the lender. They're going to need to verify credit worthiness to put together a plan for your situation. Your question to me should be, but Mike, shouldn't I be able to rate check the company, the mortgage company, to make sure that I have the best rate and loan possible? Of course. Lenders expect you to. And for the most part, they're going to eliminate those pulls by the mortgage companies if they occur within a 30-day window. And that's 30 days from the time of the loan commitment. What we don't want is for you to be shopping for a better credit card rate right now. That is going to show up on the credit report and will affect your FICO score, and it will affect the loan. Wait until the day after closing. It will be there then. Number 12 is do not max out your budget if you don't have to. And you do not have to. When I'm talking about maxing your budget, I'm talking about the price of the house. And here's where I get a lot of feedback from buyers that give up on this idea of, well, we got to go big or go home. A conversation I have with a lot of buyers is about keeping your monthly budget under control. Just because you have a loan approval for $500,000 does not mean you have to spend that amount of money. You have to keep in mind, in addition to the monthly mortgage payment, you're probably going to have an HOA fee, probably a CDD fee, homeowner's insurance, property taxes, upkeep, and all that has to come out of the same budget as your food, gas, car payment, credit card payment, your kids' elementary school trips. You get the idea. And when the lender approved your loan, did they use gross income or net income? They used gross income. That means you also get to pay taxes on that. I want to be perfectly clear. You're going to have maybe 30% of your gross income to pay living expenses. Being home poor is not a sound idea. Just because you qualify for $500,000 does not mean you should max out your budget and buy that much. I don't want to get the phone call in 3 years that you can't afford the home and you have to sell it. Number 13 sounds reasonable and does not apply to most home buyers, but for those of you who are considering purchasing a home, co-signing a loan for another person is a terrible idea. If that person fails to make the payment, guess who gets a call from that lender? You. And it shows up on your credit report as a liability. Your lender is going to have to add that amount to your debt to equity as well as the debt to income ratios. You should consider co-signing carefully at any time, but not at all during the loan approval and buying process. If your family member, brother, sister, aunt, whomever needs help, fine. Delay that. Address that issue when your keys are in your hand. The idea is to get into the house. So there you have Mike Lavoie's 13 most common reasons a mortgage does not go through and a buyer does not get to buy their house. I hope that knowing them will help you avoid some of those pitfalls. If you have any questions, give me a call. I can be reached at 813-575-2124 or by email at mike@thelavoieteam.com. If you like the video, go ahead and press the like button down below. Either way, I would like to have you join the channel and use the subscribe button to do that. Hit the notification bell as well. That way you'll be notified when my next video is out. Speaking of which, my next video is going to be about how to price a house and make an offer on that house so you will actually get the deal. I'm Mike Lavoie. Have a great day.